Hello, hello, hello. How's everyone doing today? Hope everyone had a wonderful evening, or if you're overseas, so far your day is going well. Let's get right to it. Hey, Waka Waka, good morning, Davey. Waka already wants the market to tank. You're so impatient, Waka Waka. Good morning, Patrick. Tesla to 60 would be great. Well, is that I think Tesla to 60 pre-split would be even better. Good morning, Anissa. Hey, Andrea. Good morning. I've got a busy day with real estate, but curious what Mike has to say about this ranging market. It's ranging, and we have OPEX tomorrow, and we got pretty much everything out of the way today. So we shall see. I'm just watching to see if price bumps down with the rotation zone. And we still have the potential buy, which would just be going into OpX tomorrow, so it would be aggressive. And now I'd only trade it intraday. So that's where we sit. Coco says ES is, I think you meant holding the trend line nicely. There we go. Money Mike, good morning. Good morning to us. Or is that the U.S.? Christoph, how is everything overseas? Another one of our overseas viewer. I'm glad to have you back on a regular basis. Davey, thanks for the VIX update since my silly quotes are delayed on this platform. Good morning, Options 22. Good morning, Sterling. Unchanged. Next big down leg, only possible price options lock is over. Well, it's like that tractor beam. You have the tractor beam. We'll recap it real quick this morning. You know, anything can still happen in these markets, but without some headline news, and we got retail sales out of the way. The bigger thing is that tractor beam holding it up. The chop, what? Why is it killing you, Waka Waka? Boy, you should love these consolidations. Hello, when June low? I'm looking for next week. However, if we don't get it soon, we might get another bounce, and I'll show you why. Hey, Mike and crew. Thank you, MJ. By the way, if you have not subscribed yet, we're still at 4,498. Can we get 2 more subscribers, please? Please, 2. Let's just make it going into the weekend 5,500. That's all I need to say about that. Let's just get to the main thing. Just a heads up, tomorrow morning I will be on for OpEx at the normal time. Tomorrow afternoon I have an off-site meeting, and I probably won't be home for at least an hour after. Probably I'll be around at 4 to 4:15 Central. So if you're going to tune in, I will do a quick live stream. However, it's going to be delayed for tomorrow. Just want to put for tomorrow afternoon, morning, same time. Retail sales, let me just get straight to it. Headline number, a beat, 0.3% revised. Last month was revised big low. Remember, retail sales are also inflation adjusted. And with inflation still running high, even on a beat, that's pretty pathetic. Jobless claims coming in much better. Philadelphia Fed Manufacturing Index print negative, so back into contraction. Retail sales non-headlines, so you have the core X gas and autos and X autos. I don't understand. I mean, you had the big gas component, but energy was a huge drop in the retail sales number. And I have to dive into these numbers a little bit more, but X autos down 3.3%, X gas and autos up 0.3%. So, continuing jobless claims pulling back a little, still above 1,400K. We don't really care about that until it takes out the 1,500K. But we already hit that 1,456. What's interesting now is Empire Fed also still in contraction, but bouncing back a little. Fed Philly prices paid also coming in, so we might have the peak. Also, with those PPI numbers, we might have a peak in PPI inflation, but CPI with the services aspect still going to continue to run hot, I think. Industrial production out in 6 minutes, so remind me to check on this. S&P 500, mega caps slightly down. Healthcare up, oil, we're getting that pullback with cycles pulling over, but I'm watching towards where we get back to that 80 level now. It's critical. Still 75 basis point baked in. The 100 basis point drum beating has died pretty quickly. Still there, pricing in a 26% chance, but not much going on there. Remember, we zero gamma is 4100. Unless something shocking happens, I don't see us getting there. Our major strike still the put. That's this red line down here. It's. I wish I could move the green line, but the put gamma is massive. And you also have very high call gamma too, right at this 4K. And the closer we get to expiration, the closer is that 4K, gamma will change quickly. So that is the tractor beam. Do not ignore it. There was nothing before the opening. Adobe after the market today. That's the only thing I'm looking at. So far, I know people want to. So far, I've been watching the 1 hour rotation zone. So this is a perfect sideways correction so far. Now we got this. Normally, I'd be gunning for the short side with the 4 hour rotation zone coming back into context. Why am I taking it more with a grain of salt? We do have 4 hour cycles also rolling over, but we have the tractor beam tomorrow, and that tractor beam is up here at the other end, up here at the upper end of the 4 hour and right at the daily rotation zone. So that's where normally I'd be saying, okay, I'm watching for all those shortened aspects. I really, unless we start breaking below about 39, see here about 39.42. And then I'd be watching for the spike down from yesterday's lows about 39.29. So any shorts below 39.42 are aggressive. And then if we take out 39.49, then I'm more comfortable, especially if we get confirming tick on the downside. Then I will target the 3900 strike. All right, that's where I will be targeting. We got a harmonic at 39.09. To the upside, anything would be just very minor until we get above 39.76. If we're running above 39.76, I'm targeting, my initial targets will be 39.92 to about 39.98. All right, and then I'll watch into this 4 hour rotation zone and we'll get a key return into there. By the way, a key, do not ignore this key closing price at 4,004. So really between 39.92 and 4,004, we have a pretty substantial magnet. And all that does is take it back to the daily rotation zone. Once OPEX is out of the way, if we do rally, I will watch for that push lower. We got the Fed meeting next week. Now, what I'm talking about, why? If we don't get that real breakdown soon, with daily cycles getting to the bottom, and weekly cycles at the bottom and trying to flatten, we could see a dual push back up. So we could get some sustained push to the upside before the next major rollover play. That's why we need to see a break at least shortly that takes us, I'm looking at the beginning next week, that takes us below this 3,900 level. Otherwise, we could stay in consolidation or still rally back a little longer. That's where it's sort of interesting at this point. Let's see, let me catch up. So when the June low, well, also remember, on the S&P, keep this 38.97.25 closing price in line. If we don't get that push and close below that, I'm going to hold off aggressively targeting those June lows for the time being until we get that close below there. Just wanted to put that out there too. I don't think he will do it. You'd be getting more leaks if they were really focused on 100. I think they're just going to say if we're getting more data, remember, as I said, we have next week, the 21st, is the Fed meeting. There's no Fed meeting in October. The next one's at the beginning of November. So they get some more decent data to come in. So I'm more expecting them to say 75 and be data dependent. And then if data is still running hot, they might consider a really next strong rate hike in November again. We have, after September, only two more. Pause in January, then you got one in February. Remember, they want to see the rates up around 4% by the beginning of the year. That only leaves them, if we're baking in 75 for next week, that only leaves them two more rate hikes. And we'll be at the upper end of the bound after next week at the 75 will be 3.25. So if they want to get this to 4 on the upper bounds, they really have to target at least a 50 and a 25 going into the end of the year. NASDAQ, pretty much the same story, sideways correction. Sideways correction. Minor, if you want to watch the minor breakout levels going into the open, 30. Oh, sorry, that was the Dow. What am I doing? I'm bumping down, and I'm like, that didn't look right. 12,258 will be my minor level. My minor breakdown level for a retest of the lows back yesterday will be below about 12,150. We've already tested that earlier. And there's pretty decent buying pressure. If you want to go a little more conservative, about 12,140. I can't, again, because of all this chop and all the buying pressure down there, would be watching for another bottoming pattern unless we really break below about 12,050. About 12,050, let me try to get that line there. I shouldn't have moved that. About 12,050, I will be more aggressive to the downside. Well, I'll just put the line at 12,060. 12,060 to 12,050. We can start getting below there. That will take out yesterday's lows. And if it can sustain, 11,969. Always be wary. Yesterday we had some stop hunting moves at the lows in the S&P and NASDAQ, so just be wary of that. If you don't get the sustained push lower, watch for the reversal play. Again, to bullish mode, 12,258, and then 12,300 to 12,326. The 12,326 is roughly the upper end of the 4-hour rotation zone. So any bounce there, that's what I'll be watching. And you got the daily rotation zone. So we got multiple rotation targets to the upside. Makes it pretty easy for the target areas. Blazing through the Dow. Breakout, minor 31,325, more major about 31,390 to 31,400. Breakdown zone, remember yesterday you got the spike down, so can't get aggressively bullish till below about 31,150, but then I'm just targeting yesterday's lows. I'm more focused on the S&P and NASDAQ. Russell still caught between the range breakout 1851, breakdown 1823. You break below 1823, only target yesterday's lows. And then I will be targeting 1815. Major sell-off would be 1807, minor would be 1815. DAX, yes, this is a sloppy 4-hour double. You got the hitch in the middle, so it's still valid on the 1 hour. That's the only thing I'm watching, but we break below about 12,961. Here's now that I'm using. Besides, we're holding at that 62.5. So this is a very key level for the DAX on a closing basis. If we do close below there, then my next target area is about 12,838 to 12,873, and I really will be focusing on that 75% harmonic. Not looking at anything bullish unless we trigger that double bottom. Notes, still some pretty decent buying pressure down here, but no substantial major bottoming pattern. So from my perspective, I'm sitting on my hands in notes right now, letting this cycles get to the bottom. Then we'll take it back. Remember, you don't always have to have a trade in every market. Dollar index, a nice little flagging pattern so far. So what? Sorry about that. Watching for a resumptive move with this flag pattern until that hits sitting on the hands in the dollar index. Key support if we pull back more, I'm watching about 109.07. That's another sit on the hands. VIX, if we start breaking down below about 26, I'm going to go 20. Miners 26, more significant is about 25. 26, I'll get minorly bullish. 25, I'll get more substantially bullish. I doubt we'll do that 25 level today, but 26 is my going into the open, what I'm watching for to get slightly more bullish. Won't get overly bearish until back above 27. 26.50 will put me more in neutral, tipping towards bearish. Crude, this is another one. We got cycles rolling over. There is an aggressive breakdown play below about 86.25, but then you're looking at 85.30 as the target area. So it's going to be tight with the cycles rolling over. So from a longer perspective, it's sitting on the hands. What's interesting also, from the Japan's Katamaya, the country lacks sufficient tools to battle yen's steep decline. I had Sterling put out that I was keeping an eye on the 10-year the other day before he even said that, because if they feel that they cannot start containing the yen to the upside and intervention won't work, you could see some interesting stuff in their 10-year notes that they have been trying to peg to 25. You've seen we started to get pressure on that again. We start to see that break, you could see a substantial weakening in the yen that could get very, very interesting. So far, consolidation holding the daily rotation zone. Watch for the rotation zone on a closing basis. A close below there, I will target the lows from the 9th. As long as this holds up, I'm still targeting the upside, which would be continued weakness in the yen. Euro, we have a double consolidation day so far, so I'm watching yesterday's high and low. Other than that, until the dollar really gets something going on, not interested in that euro at all. Bitcoin, since it's still so pegged to the risk assets, we're just watching for that pause. We have yet to close below that 62.5 the last 2 days, so that's why I'll be focused on today. But overall, any rallies are still to be sold. Tesla still holding up on the breakout play above these two highs that make a potential double top. Remember, that's not confirmed or triggered. My major target area, especially if we get the massive call buying again, is this 311 to 313 area. That is substantial resistance. The only thing is to the downside, I'm waiting for that double to trigger, but that's where we sit with that. Spiders, slight gap down today, so on any rally mode, it would just be targeting the gap. If we break below, on a down move, I'd just be focusing on yesterday's lows in the 87.5 harmonic, about the 331.35 area, below that which I doubt will do. So to me, more so, it's the gap play. And yes, this is a little mini double. That is this, however, we got to look, even though you got this little triple on the 15, it's still a valid, which means you'd have to trade it. You'd need the longer term close, at least a 1 hour close to trigger it. That's what that means when you have the triple on the 15. You need to confirm it on a higher time frame, so you also need the trigger on the higher time frame. But that would be above 395.71. Really doubt we'll see it, but there is that potential there. And my target would be 397.68. You got to be prepared for everything no matter what we think. Remember, trade what is, not what we think will happen. Q's also gap down. The thing will be focusing on the gap fill on any move up. The gap fills at 296.08. I'd focus right in front of 296, honestly. Key support is 293.10. So that's going to be a target for any sells. You need to get that, at least that 1 hour close above 296.92. And you got a lot of stuff in the way. Also, remember your rotation zones are in the way of these targets, so they are the lower probability variety. So in terms of housing, Andrea says, I think this in terms of housing, things are slowing down a little, but that's in terms of the fall. There's still a lot of buyers out there. Sellers need to stop being so aggressive. Interesting. Home prices being stagnant until at least next spring, then we'll see. All right. So thank you for that feedback. Thank you for tuning in, Andrea. I know you have a super busy day. And anytime you can give us housing market feedback, it is much appreciated. So thank you very much. I appreciate anybody typing in information here, especially in your area of expertise. We can see if put gamma, we also have decent call gamma. So remember, gamma squeeze can run both ways. So you can see some crazy upside action waka waka. It means tomorrow I'm prepared for some massive potential reversal moves intraday and some interesting flips and volatility. This is a good statement. People just need to read the real estate market like the way we do the financial markets. I completely agree. That's an excellent statement, Andrea. Target 3,900, even though a harmonic line. Yeah, harmonic line I will use. That 3,900 is going to be the magnet, even though there's a harmonic line. If we really do break down, we have that minor harmonic 939.09. Why am I targeting the 3,900s? And this would be not just for today, but if we did have that breakdown play, because the next substantial, although be very minor, it's very minor compared to that 4K level. However, your next major strike is this 3,900, especially look at the put gamma here. Not so much for call gamma, but look at your put gamma here. That's why I will target on a breakdown play, the tractor being the 3,900. That's why the harmonic is minor. That can be used as a stop adjustment. But the bigger play, if we started to break down and hit that 39.09, that 3,900 is going to be a massive magnet. Hope that makes sense. Good morning, Josh. Remember Adobe after hours. Adobe was also looking. I saw it go scroll across the headline. I did not have the time to look into it. They were looking to acquire a company. If somebody has that information, put it in. I did not have the time to read, but they could be gapping down based off the acquisition. Hello, Lauren. Too bad they are 12 months behind in these rate hikes. They should have been hiking. You know what? If they had started hiking when a bunch of people in the FinTwit said, inflation is going to go out of control. If they started hiking then, they'd already be at pause. We'd already be at pause. We wouldn't be in this insanity. Hey, Andrew. So you're in my neck of the woods, Andrea. Reach out to me sometime via the Path Trading email if you have a chance. I got the SPY. Let's see. I'm just trying to catch up. I was just seeing if there's John, good morning. Just seeing if I missed anything of major. Oh, thank you. Industrial production. Where did we sit with that? Where did we sit? I got so side. That was more minor. That was minor. Industrial production. Oh, fork decline year over year. Pullback from previous. Capacity utilization still actually dropping. So that's not bullish. But that's not going to really dictate today. But that's overall, we're still getting things contracting. I'm still expecting a pretty significant recession. So that's just reinforcing. Year over year was a slight up from last time, but I'm more focused on the month over month. We'll see the inventories number. I doubt that will be a major play also. I'm just trying to catch up. You guys have so many comments back and forth here. Oh boy. ENPH, end phase. Yeah, just strong rotation back up. This was a rotation zone buy after the pullback. So next targets. This gives a great stop area because you do have a potential double top, which remember, even it's slower. I'd actually have to do it off here because of the way this is looking. But that gives me a stop level. So unless that triggers, I'd be focusing on the breakout play to the upside. Market's just opened. I'll peek in on that. I'd be focusing on the breakout play with that to the upside. Also coming back to pull to test this key prior resistance becoming support. And we still have the energy sector being strong. I don't know what else to say. You got to trade with the trend till it ends. But on a short-term basis, that would be my stop price. On a longer-term basis, my stop price would have to be still below 268 on like a weekly basis. But if you're playing something for the very short term, that would be the stop price for end phase. All right, all right, we got the short-term breakdown play this morning. Going in the open, but still remember, you got a lot of key support right down here. So watch for the potential fake out reversal or the breakdown reversal since we are still in consolidation. Remember, we tried to watch for that shake and bake yesterday, but could not get above the 39.76. I'd still be watching for it to suck people in on a potential breakdown play and then snap it back. Thank you, Waka Waka. Adobe to acquire Figma. So that's probably what the gap is. I wouldn't say that's tanking. You guys overreact. This is not tanking so far. Remember, you got a lot of major support. If I was going to put on, where is it? Where do I have? Not that. Where I have to. Oh, I made. Oh, there we. It didn't come on this one. I'll have to put that back on. I will hit to reset that. There is massive. If you just look at the charts down here, okay, and this is where I will look beyond a clear path because we're in consolidation. But your breakout zone is roughly here for the clear path, 39.42. But look at all this behind it. This is where I will glance. People wonder when I look behind a clear path. But look at all these levels. So there is substantial buying pressure in here. So right now, we got some downward pressure, but you're going in. So if you're trying to trade this to the short side, you got to be, what I consider, you got to be super aggressive. And I call it, I like to call it chinging out the trade, like ringing the cash register. So you get short an even number of lots. And then I try to pull off half of the trade so I can get my stop to where the stop is not necessarily the entry price, but the stop, if you get the quick reversal, means you can wipe out or scratch the trade. Okay, so into this kind of trading, that's how I like to do it if I'm trying to take advantage of something short term. But this is still balanced trade right now. Oops. Don't love the tick as much on here. I like it on my trading platform. We had a little negative tick going into the open, right to the key zone. Right to the key zone. But now watch to see if this starts getting your tick back snapping above 400 and spiking to 800, we could be for a more of a balanced day. We've already held, so we got some selling pressure in the open with market open plays and market on open orders. Now we're getting a bounce back. So I'm going to see how we play the other side of this with relation to the 400 to 800. If we start topping out in there, we could be for a balanced days. All right, which means I start watching for continued consolidation. Now, if we come back down here and start getting some momentum downside and take out this a 1200 level again and can't even get back to zero tick, then we could be in for a more negative off the open day. That's how I look at the tick. So that's where I'm playing that with this. All right, so we had a little bounce, couldn't get back to zero tick. So now I'm focused on this 39.42 area to see if that holds, and then I'll start watching the tick again. If we can't sustain a tick above 1200 and we start above zero and we start breaking down below 39.42, that can get more aggressive to the downside. If we don't get that tick confirming a down move below 39.42, we could say more of a balanced day. And I'd start watching for this prior breakdown area right in here for a quick little retest. That's very smart. Remember, 70–80% of the days are choppy to range days. So don't count on a trending day every day. Why is day trading so hard? Because you have these first off, people overtrade them. That's the first reason. People try to capture every move. Don't try to capture every move. Wait for the strongest setups. Also, wait for your slightly higher time frame setups. You're better to take, and some days there just aren't good trades. You're better to maybe target one trade, two trades a day if they set up on the larger time frames. People try to trade all this noise back and forth and capture every move, and they just get wiped out. Like yesterday, there were some good double reversals. There were some nice breakdown plays. Other than that, it was just And I completely agree. Andrew says people don't look at the big picture weekly and daily charts. You have to keep the big picture in mind. It's why we start with our bigger picture. It's why we come up with our key levels on the bigger picture. And then you can fine tune it on the lower levels. But look at where we still sit. You have major support down here. You have major resistance over here. So the safer play is below these levels or above these levels unless you're playing some range-bound reversals. All right, I'm going to wrap it up now. I got to get into the open. With that, there was a little extra teaching. Hope that helps some people think of things a little differently. Again, thank you for everybody's input and comments. I will talk to you all after the close. Bye for now.